Hello, everyone. Logan Hertz here with Hazeltine LLC. What is the Augusta Rule? I'm talking more about tax strategies, some of which are a bit more advanced. Let me get my compliance out of the way. I am not licensed to give tax advice. This should not be taken as specific legal investment or tax advice. I'm just providing general information. Whether this particular strategy applies to you or not depends on your situation. You should always consult your own tax professional. And if you want an introduction to a good tax professional or a good tax team, I can help you with that. Book time with me. I can help you find the right person to implement some strategies. But taxes, it's just one of those things that people don't maybe think about as much as they should. There are a number of ways you can potentially reduce your tax burden without going out of your way. Just taking activities that you're already doing or that you're inclined to do and finding more tax efficient manner of doing them or finding ways to turn them into tax deductions. So what is the Augusta rule? This is one of those strategies that can be used by the average person. I'm going off of a website. There was an interview with a group on Caleb Gilliam's show. I can link to it below. And this was what inspired me to talk about the Augusta rule, which I had known about, but I hadn't known how powerful it can potentially be for business owners. The Augusta rule is a provision in the US tax code, section 280AG, that lets homeowners rent their residence for up to 14 days per year without paying taxes on that income. The rule was created in 1976 when homeowners around the Augusta Golf Course, host of the prestigious Masters tournament, lobbied Congress to allow them to rent their homes tax free. It hoped that some congressmen themselves might benefit. The law was reaffirmed in 2023, confirming what savvy business owners have been doing for decades. It's one of the few legal strategies that turns a business deduction into personal tax free money. And I'm just reading from theaugustarule.com. If you go to theaugustarule.com, that's where I'm getting this information. That was the group that was interviewed on the Caleb Gilliam show. This is a general strategy known as income shifting. If you earn personal income, that income is fully taxable to you. But there might be various ways of shifting that income to a different person or a different vehicle where now it is not taxed. Another example, a strategy I've talked about before, is if you are a business owner and you have minor children, you can employ your children as part of your business, pay them a salary, and then write that salary off your taxes as a business expense. That's a strategy of income shifting. You're shifting your own personal income, where it's going to be taxed, maybe taxed at the highest rate, to a minor child where they're not going to be taxed. There's a lot of details around the Augusta rule that I'm not going to go into, but this is the basic idea. You take your primary residence, which you're not using as your primary place of business, and you can rent it out to your business for up to 14 days a year, and then write off the rental that you charge, the rent income that you charge your business for those 14 days. Now, there, of course, like everything else, you have to do it right and you have to keep good records. As an example, you have to charge your business the market rate of rent. You can't just invent some exaggerated rent that you charge your business. Extending it further, you could also rent it out to a different business. It doesn't have to be your business. One of the things I learned from researching this is that one of the things that people miss is that the rent that you charge your business is not the same as what an Airbnb would charge. When some people try to get the fair market rate, they look at what an Airbnb would charge. But that might be significantly less than what a business might be paying, depending on the type of business and the type of business activity they're doing when you're renting your house out to them. So there could be a lot more savings on the table than you're thinking. It just depends on the type of business that you're in and the type of business activity you're going to be doing. Garrett Gunderson uses this strategy, and he's in an area where at a certain time of year, there's a lot of tourists that come into his area. So the rent that you can charge goes way up. So, of course, that's exactly when he has his employee, his company meetings at his primary residence. So he can justifiably charge a very high rent and therefore get a larger tax deduction. And again, I'm no expert on this. I'm just giving you my layman's understanding of it. If you want to learn more, you can schedule time with me and I'll refer you to a tax professional who actually knows the details and can help talk you through your specific situation. But A couple of interesting things to note. So from the podcast, there's some Q&A here. Question: can multiple unrelated business owners each rent the same property during the year, each personally stay there for 14 plus days, and each legitimately use the Augusta rule? Answer: yes, technically they can. Each person can establish the property as their own dwelling unit for the required days, but doing this can likely be an audit magnet. Okay. Question two: reverse Augusta with a family member's home. Question: if a family member owns a home, can a business owner use that home for a business purpose and structure it so they receive the rental income instead of the family member, essentially a reverse Augusta? Answer: yes, a reverse Augusta structure is possible, but it must be for a legitimate, defensible business purpose. Proper documentation is essential. You can actually scale this up if you're the sort of person who has not just your primary residence, but maybe you have multiple personal residences. Now, we're not talking about rental properties. You cannot do this with a rental property. But if you have a vacation home that you're not renting out, you can also do the Augusta rule on that. So you could do the Augusta rule on your primary residence, and then you could do it on a second residence as well. And there's certain qualifications as to what residence you can use and what residence you cannot use. But just for simple math, let's say you have your primary residence, you rent it out to your business for 14 days out of the year for all hands meetings, for client appreciation events, for whatever, and you charge your business $2,000 a day in rent. That's now $28,000 of income that you can write off of your taxes. You could potentially write off a lot more just depending on your situation. But the Augusta rule in general, what is it? It allows you as a business owner to rent your primary residence out to your business for up to 14 days a year and write off your taxes the rental income that you charge your business. So this is just another one of many tax strategies that are relatively well established that can be utilized to reduce your tax burden. Again, always check this with a qualified tax professional, which I am not. Don't take this as personal tax advice. I'm not telling you what to do. I don't know your situation. But if you want to talk further, feel free to book time with me, and then we can talk to an actual expert who really knows these rules well. I hope this was helpful. We'll talk soon. Bye bye.